Welcome back to Halftime Report on CNBC TV18. Now, we're going to talk and bring on our fundraise segment, which is a special segment where we are going to be focusing and talking to the partner at 8 Roads Ventures. Now, this is a company which invests in tech side, med tech, healthcare tech, I beg your pardon. And that's what the focus is, right? Because healthcare in India is the focal point. Where are we going to be heading from here? Where is their penetration required? What are the trends that are going on? We're joined by Prem, Pavoor, who is the managing partner at 8 Roads Ventures. Prem, good afternoon. Thank you so much for coming to the studios. And, let's start by talking about this industry where, overall in India, healthcare hasn't had that much of a penetration versus the globe. Now, over the years, how have you seen this change? What is the market that you're seeing for whether health tech, med tech, overall consumer health side? Where are you seeing that moving?
First, thank you for having me, Vinny and Mangalam. I think it's a matter of when and not if that the market expands. Healthcare as a market has expanded close to 7 times in the last 20 years. It's a roughly $250 billion market that is poised to double to $500 billion by 2030. And as you see a few things change, India will catch up to countries like China, which is today a $1 trillion market, and to the US, which is a $5 trillion market. Sooner than later, you're seeing detection of diseases happening earlier, thanks to better diagnostics. Folks, both in the cities and outside, are totally oriented towards wellness and preventive health. So that helps. You've got insurance penetration going up, affordability is going up, and access is going up, both through, the smartphone, where you see 80% penetration, but also through brick and mortar infrastructure on the ground, thanks to all our private equity peers investing in hospital chains.
What's interesting is that I track the consumption space, so pardon my ignorance about the numbers on the healthcare space, etc. But I want to know, intuitively, they should be pretty similar in size, right? Because the same consumers who are consuming stuff from the FMCG, D2C players, etc., are the ones who will eventually, at some point require some sort of healthcare. It's a human sort of market, so to say. So why is there this divergence in innovation, investment, and the buzz around healthcare versus the consumer sector? And what is it that investors and PEs, are doing to increase the growth here or accelerate the growth here?
Give it time, Mangalam, is the answer.
By give it time, do you mean as we age, we require more healthcare?
I hope not that, and we focus more on wellness then.
And hopefully you get younger as you age. But I think that it is all changing on the ground. You are seeing a bigger push towards consumer and wellness products, which are all driven by brand. You are seeing a real change towards people wanting and preferring organized healthcare and branded healthcare. And we are seeing this change after the pandemic. People want to go to doctors who are known. People want to go to institutions that are well known. And so the importance of the brand, also take drugs that are branded. So the importance of the brand is only accelerating within the healthcare community, which of course has been a mainstay for the consumer business. So we are also seeing that in a lot of our consumer healthcare investments, where you saw a slight dip after the pandemic as people went back to their old ways. But now you're seeing a re-acceleration and a resurgence of interest in both products and services that are branded.
So in terms of investments, if you could throw some numbers, earlier we had the wave of D2C investments, then there was tech investments, there was manufacturing, etc. What proportion of PE in VC investments are now going into healthcare, and what does that mean for the growth here?
Healthcare has become the largest sector for VC and private equity investments in the country. For a person who has been focused on the sector for the last 18 years, it's a joyful moment for me. The investment quantum has doubled from pre-pandemic levels, so from 3 billion a year to close to 6 billion, and it has stayed steady at that rate, if not moving up. For the first time, exits for venture capital and private equity are keeping pace with realizations. And for anyone, therefore, who is investing into these funds or funds like us investing in these sectors, that's the holy grail where you're able to invest and exit at the same momentum. So it's all creating a virtuous cycle for the sector.
Prem, while these investments have doubled, post pre-pandemic to now you're comparing, I want to understand in terms for the pharma where there's maybe drug making, manufacturing, that's what is going on. We've spoken about this China plus one strategy for the pharma pack as well. Has that now been significantly playing out? Are we, moving towards maybe a scale to achieve or compete with China?
You are seeing a perceptible change on the ground with multinationals wanting to think about a China plus one hedge and diversifying their supply chains, and India is an obvious choice. So the number of RFPs for contract manufacturing organizations and for other manufacturing entities has significantly moved up. One of the things that I find intriguing is that it's very hard or will be harder for India to compete on scale when you think about the size and the scale of China manufacturing versus Indian facilities. But what India has begun to do very well and innovatively is to innovate on process. So for example, one of our partner companies called Enzene makes biologic drugs, but instead of making it in these large several thousand liter reactors, they make it in a continuous fashion, so they're able to shrink the footprint to the size of a room. We have another partner company called Laurus Bio, which is beginning to make products for the FMCG companies globally, but using a biomanufacturing platform. So process technology is really working to the country's advantage.
All that. Quickly, before we let you go, two sectors in the healthcare space that you're betting big on right now, which you believe can become extremely big? Because the last time you joined us, you said protein would be one, and the second would probably be, preventive injury prevention. Now, what are the things that you're betting on?
You have to come to our conference next week called Scale Up Health. We are in our fourth edition of the conference. But if I had to pick two, I would say one is innovation for the world coming out of India. Can India catch up to China and then the US in terms of drug discovery and innovation? And the second is there a version 2.0 for digital health and health tech in the country? Will large language models and AI disrupt the way we think about
What are some of the companies that you're talking to right
primary care? If I told you that, I'd have to kill you, Mangalam. That is, as you know, our IP. But and also, can India innovate from services to products when you think about, healthcare IT?
Thank you, Prem. Thank you so much for joining in and giving us an outlook onto that. We'll obviously stay tuned to the outcome of the investors meeting that you do over the next week, and we'll watch out for that as well. That, ladies and gentlemen, was Prem Pavoor of 8 Road Ventures investing into the healthcare space. What we'll do is take a short break, come back on the other side. We will have Manisha Gupta joining in with RS Sodi, the president of Indian Dairy Association, on the GST cuts. Stay with us.